Well, good Monday morning. I hope you're having a great Monday out there. I'm Marlon Bowling with you, your tour guide to the ag commodities. Guess what? We are now into our final trading week of March. And by the time we get to the end of this week, we will already, believe it or not, Tammy, we will have gone through our first quarter of 2023 by the time we get to the end of this week. Isn't that something? Where's the time gone? Yeah. So that means also by the time we get to the end of this week, we get into on Saturday, April Fool's Day. And then once we're in April, then we get into full-blown planting season. So we're not very far away from it right now. And a lot of things can start happening here in the next few weeks. So buckle up. Could be a bumpy ride, that's for sure. We do have another overnight, or in this case, over the weekend, export sale announcement here. So the string continues, and once again, it's corn. We have an unknown destination, though. Wink, wink. We kind of have a hunch where it may end up, but it's unknown. 112,800 tons, though. And to talk about that, I want to bring in Brian Hoops of Midwest Market Solutions. He's in Springfield, Illinois. Springfield, Missouri, I'm sorry. Didn't mean to move your state there. Talk to me about this. 112,800 tons. That's a bit of a clue that usually China doesn't buy in things that are not real round numbers on the thousands there. Does that lead you to think it could be somebody else?
Well, not really. I think history's told us that most of these sales are from unknown destinations are switched to China, and I guess I'm going to believe this is probably China behind the scenes buying it, even though it's a little bit of a strange amount. Normally Mexico buys in strange amounts, like we saw this morning, 112, 800,000 metric tons. But usually they don't switch from unknown destinations either. So it's, I don't know. You don't know what to believe, but you can't trust anyone. You can't trust the Chinese government. Whatever you want to say, I think it's going to end up being China. They've been buying a lot of product from the United States. I think they'll continue to do so.
So what is this, 9 out of 10 days now with corn sale?
Yeah, exactly. 9 out of 10 days with a corn sale. Very, very strong streak. We had 2 weeks ago, we had 4 days. Last week, 4 out of 5 days, and we're starting off this week with another corn sale. The amounts have gotten a little bit smaller. Last week's sales were certainly smaller than the previous weeks, and this morning it's not a large sale, just a couple cargoes, but it is something telling us that there's still demand for corn, for U.S. corn at these price levels.
Well, let's take a look at our prices in overnight, and we'll look at our quotes provided by bar chart here. And on the corn, we ended up with the nearby contracts under a little bit of pressure. The May was down 2 1/4 at 6.40 3/4. However, you had December going up a penny at 5.61 1/4. So kind of reversing that spread activity we've been watching for the last week or two. On the soybeans, we have the May up 4 3/4 this morning at 14.33. When I got up today, I think it was pretty flat, maybe up a penny is all. November was up 6 3/4. Look at that, 12.80 per bushel in the overnight trade. Now on the wheat in Chicago, May was down 4.5 cents at 6.84 per bushel. In Kansas City wheat, you had the May contract actually down 5 3/4. And in Minneapolis, we finished up overnight with the May up 1/4 cent, but the July was down a penny. We also had the cotton market in that July contract overnight, showing a trade that was 133 points higher on July. We were at 78.50 per pound. December was up 123. Well, we had some stuff going on in the outside realm as well overnight. We had some acquisitions taking place in the banking industry, and we'll talk more with Brian Hoops about that and maybe what that means for ag trade when we come back. Well, we're back with you, and well, right before the break, I was alluding to the fact that we had a little announcement over the weekend that First Citizens Bank, which is located in Raleigh, North Carolina, was acquiring at least much of the assets of what's left of the Silicon Valley Bank. I think now they call it Silicon Valley Bridge Bank or something now that FDIC took it over. But anyway, they're acquiring the assets, and apparently they and FDIC, from what I understand, may be splitting some of the losses or something involved with that. it's going to be a complicated deal. But anyway, that news seemed to give a boost to the financial markets here overnight. And on the Dow Jones Industrial Average, the June futures were 234 points higher this morning at 32,668. Sometimes that can have a spillover impact on some of the ag trade, especially like in the meat markets. Now, on the U.S. dollar index, it's taken the news just staying pretty stable. It's not doing much of anything, down 59 points. But in the bigger scheme of things, that's basically the equivalent of just staying flat. Crude oil, they must think that maybe the economy, maybe the economy will pick up a little bit. And so crude oil actually went back up. It's up $1.18 right now. And we're at $70.44 per barrel. We had a high overnight of $70.84. So we're about 40 cents off of that earlier high. We're back with Brian Hoops here of Midwest Market Solutions. So, Brian, that news of First Citizens taking over SVB, do you think that's going to have any spillover impact, maybe on the ag commodity trade here?
I think it could a little bit. Certainly having impact on like gold and silver markets. Those markets had really rallied, put a lot of premium in last week because of concerns about the banking industry. And it seems like for some reason those fears are completely washed away this morning. Gold and silver down really hard off of that news. And I've seen some of these banking stocks moving to new highs here this morning, which I think is a real surprise to the trade. I don't know that it's going to be able to be sustained. As far as livestock futures, stock market is a little bit higher on the news. That could be supportive to cattle this week. I thought the disappointment really in the cattle market was not so much the cash was weaker, but the slaughter pace was down from the previous week. Only 626,000 head killed last week. It's a far cry from where we need to be in that 650, 660,000 range. So that was what I thought was a real disappointment and what we really need to see improve upon this week.
Well, we wrapped up last week with June live cattle. If we can bring that back up on the screen here, they were higher by 80 cents as we headed into the weekend. And the feeders, we finished on Friday with the April down just 20 cents, didn't move too much at all. Lean hog trade last Friday, we had the May contract up to 32. We'll see if they can get any follow through on that here this morning. Brian, thank you for the information. Appreciate it. You have a good week out there. Brian Hoops of Midwest Market Solutions with us.